If you are holding XRP right now, then this is one of those discussions you need to hear from beginning to end because the cryptocurrency market is entering a period where uncertainty is rising again, investor emotions are becoming more visible, and several major developments are taking place at the same time. While many people are focusing only on short-term price movements, there are much bigger forces shaping the future of digital assets, and understanding those forces could make all the difference in how investors position themselves over the coming years. Hey guys, welcome back to Whiteboard Crypto Update. In today's video, we will talk about XRP. So be sure to stay focused as you surely don't want to miss out on this. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads. This video is for educational purposes only. It is not financial advice. Always do your own research before making any investment decisions. At the moment, global markets are facing renewed geopolitical concerns. One of the biggest stories gaining attention is the possibility of increased military activity involving Iran. Whenever tensions rise in the Middle East, financial markets tend to react quickly because investors become concerned about broader economic consequences. Cryptocurrency is no exception. As headlines began circulating, many digital assets, including XRP, experienced selling pressure. However, what is interesting is that the reaction has been far less dramatic than many expected. When I first started seeing these headlines, the first thing I wanted to check was the market itself. Historically, events like these have caused sharp reactions across risk assets. Yet this time, the response has been relatively controlled. That suggests many investors may have already anticipated the possibility of escalation. Markets often move not only on news itself, but on expectations, and it appears that a significant portion of this concern may have already been priced into current valuations. The key question moving forward is simple. Will these developments lead to a much larger conflict, or will they ultimately push all parties back toward negotiations? That is the factor investors need to monitor closely. If tensions remain contained, markets may stabilize relatively quickly. However, if the situation expands significantly, additional volatility could spread across stocks, cryptocurrencies, and other financial markets. At the same time, something else is happening that I find extremely interesting. Some of the biggest names associated with cryptocurrency investing have recently become increasingly frustrated with market performance. Across social media, interviews, and public appearances, several well-known investors have expressed disappointment that Bitcoin has not been moving higher as quickly as they expected. What fascinates me about this situation is not the frustration itself. Every investor experiences periods where markets fail to meet expectations. What stands out is how quickly some individuals begin questioning an asset simply because its price is not moving upward fast enough. There is an important distinction every investor should understand. Either you believe in a technology because you understand its long-term potential, or you are simply participating because you expect the price to rise. Those are two very different mindsets. If your entire conviction disappears whenever a chart turns red, then perhaps the investment thesis was never based on fundamentals in the first place. Take a step back and look at Bitcoin from a broader perspective. Yes, there have been corrections. Yes, there have been periods of weakness. But anyone who has followed the market for multiple years understands that volatility has always been part of the journey. The investors who achieved life-changing returns were not buying after everyone else became excited. They were accumulating positions years before mainstream adoption arrived. That principle applies to every emerging technology. The biggest opportunities rarely appear obvious at the time. In fact, the best opportunities often look unpopular, risky, or misunderstood when they first emerge. This brings us directly to XRP. One of the reasons many XRP supporters remain confident is because they are focused on a completely different narrative than most market participants. While many investors continue asking whether prices will move higher next week or next month, Others are focused on whether blockchain technology is actually solving real-world problems. The difference is enormous. A large percentage of the market still approaches cryptocurrency primarily as a speculative investment. The thinking is simple: buy an asset, hope demand increases, and eventually sell it at a higher price. While there is nothing inherently wrong with seeking profit, that approach often ignores the underlying technology that creates long-term value. When we examine what is happening across the XRP ecosystem, the conversation becomes much larger than short-term price action. The XRP ledger is increasingly being discussed as infrastructure that could support future financial systems. Whether through tokenization, settlement solutions, cross-border payments, or institutional applications, the focus is gradually shifting toward utility. This shift is significant because the cryptocurrency industry appears to be entering a new phase. For years, speculation dominated headlines. Investors primarily cared about which coin would rise the fastest. Today, however, institutions are increasingly asking a different question: which blockchains can support real economic activity? That is where tokenization enters the picture. Around the world, financial institutions are exploring ways to represent traditional assets digitally on blockchain networks. This includes government securities, bonds, money market instruments, stocks, real estate assets, and many other categories. The objective is to create more efficient systems for issuing, transferring, and settling value. Imagine a future where financial assets move globally with the same speed as information moves across the internet today. Imagine transactions settling in seconds instead of days. Imagine a financial system that operates continuously rather than being restricted by traditional banking hours. That is the vision many blockchain advocates are working toward. Supporters of XRP believe the XRP ledger could play an important role in that transformation. They view it not simply as another cryptocurrency, but as part of a broader infrastructure layer designed for the movement of value across global markets. Whether that vision ultimately unfolds exactly as expected remains to be seen. However, what cannot be ignored is the growing conversation surrounding tokenization and institutional blockchain adoption. This is where many retail investors make a critical mistake. They wait for validation from celebrities, television personalities, and mainstream financial commentators before paying attention. By the time those voices become enthusiastic, much of the opportunity may already have passed. History repeatedly shows that the individuals who generate extraordinary returns are often those willing to research emerging trends before they become widely accepted. They spend time understanding technologies when interest is low, not when excitement has already reached its peak. Think about the early Bitcoin adopters. The investors who generated the largest gains were not the ones purchasing after major corporations and celebrities embraced the asset. They were the individuals studying the technology years earlier when very few people believed it had a future. Many XRP investors believe a similar dynamic could eventually occur with XRP and broader blockchain infrastructure. Their perspective is that widespread institutional adoption, if it materializes, will not happen overnight. It will develop gradually through partnerships, infrastructure development, regulatory clarity, and real-world implementation. Because of that, they focus less on short-term noise and more on long-term trends. Meanwhile, the broader financial industry continues exploring digital assets at an accelerating pace. Stablecoins are becoming increasingly important. Tokenized financial products are gaining attention. Large institutions are experimenting with blockchain-based settlement systems. Governments and regulators around the world are evaluating digital asset frameworks. All of these developments point toward a future that may look dramatically different from today's financial landscape. In that future, blockchain technology may serve as a foundational layer connecting various forms of digital value. Tokenized assets could represent everything from cash and government debt to equities and real estate. Liquidity could move more efficiently across borders and financial systems than ever before. For investors focused exclusively on daily price movements, these developments may seem irrelevant. But for those attempting to understand where the industry could be heading over the next decade, they are incredibly important. That is why I believe the biggest winners in this space will not necessarily be those who react fastest to every headline. Instead, they will be the people who take the time to understand the technology, study market structure, evaluate adoption trends, and maintain conviction during periods when sentiment is weak. The reality is that wealth is rarely created by chasing assets after they have already become universally accepted. Wealth is often created by identifying opportunities before the majority recognizes their potential. Today, many people remain skeptical about blockchain technology, digital assets, and the future role of networks like the XRP ledger. But skepticism has accompanied nearly every transformative innovation throughout history. Eventually, if blockchain adoption continues expanding, many of today's critics may become tomorrow's supporters. The difference is that early participants will have spent years understanding the opportunity, while others waited for confirmation. As investors, that is the lesson worth remembering. Do not build your investment strategy solely around celebrity opinions or short-term market sentiment. Focus on understanding the underlying technology, the real-world applications, and the long-term trends that could shape the future of finance. Because when the next major wave of adoption arrives, it may not be driven by hype alone. It may be driven by utility, infrastructure, and real-world implementation. And if that happens, the investors who recognize the opportunity before it became obvious could ultimately be the ones who benefit the most. That is why, despite market uncertainty, geopolitical tensions, and short-term volatility, many XRP supporters remain focused on the bigger picture. They are not simply asking where the price will be tomorrow. They are asking what the global financial system could look like 5, 10, or even 20 years from now. And depending on how that future unfolds, the answer could be much bigger than most people currently imagine. Well, guys, that's all we have for you today. What are your thoughts on XRP? Get involved and let us know in the comments down below. Thank you for watching, and we will see you again in the next video. Goodbye.